The tariff day is finally here. Of course, it's going to be much later tonight. It's only 3 p.m. Washington time when the tariff announcements are going to be made. But overnight, the White House has made it absolutely clear that the implementation of tariffs is going to be with immediate effect. For the global markets and for us, Wall Street ended flat ahead of the Liberation Day. The futures, though, are in the red amid, that looming tariff implementation. The 10-year yield that's fallen to about 4.17%, and the dollar is hovering around at that 103 mark. Oil, it's eased off a little bit from those 5-week highs. Gold has taken a breather. It seems like it's all in pause mode before that big tariff announcement. For our markets, though, we take a huge knock off, lost about over 300 points, and we are back sub that 23,200 print and trade.
Nobody will say anything new that the next trigger for the market would be tariffs.
Yeah.
I mean, everybody knows that it is going to be tariffs. So what you could understand and ask yourself is that what is the positioning of the market and what are the expectations which are in the price, and what is something which will please the market, what will not please the market, and what will be status quo for the market. It's not about tariffs are coming. It's about what is in the price and what is not in the price. Interestingly, if I look at the positioning of the market, which is what matters, Aisha, the nervousness in the US market is far higher than nervousness in other markets. And I'll tell you why. It's like saying that US will be imposing tariffs on other countries, and financial markets in emerging markets, countries like India, China, Indonesia, where the tariff interplay would be the highest, those markets are not that nervous. And that is how the positioning of the market seems to be. Anything beyond 25%, Aisha, is something what will disappoint the market. Anything less than 20%, and if the broader category is included in terms of reciprocal move, I think that is something which is in the price now. Now you got to figure out that could it be buy the rumor, sell the rumor and buy the news? It may well be, Aisha, because markets never react to the same thing twice, and everybody knows the tariff is coming, and the quantum in a sense now is getting more and more galvanized, anything between 20 to 25%. Look at auto tariffs when they came out. It was a one-day reaction. Canada, Mexico, where tariffs have been imposed, those markets are in the green. So we'll talk about tariffs when they come tomorrow, but the broader thing is that what is the market setup? The market setup is US markets are more nervous than emerging markets. Second, anything between 20 to 25% is something markets know which is coming. Anything above that, any new thing which comes out which markets are not prepared for, that will shock the market. Otherwise, tomorrow morning it pretty may just be a status quo.
Yeah, in wait and watch mode. That's all that one can say. But wondering what happened to our markets yesterday. I mean, the fact that we saw that big sell-off, we're sub that 100 DMA, almost seemed like the markets want to forget all that rebound that we've seen from those 52-week lows and all the good work that we've done all through the month of March. Literally playing fool with us. The mid-cap index as well managed to hit a 1-week low, and we're now sub the 23,200 mark. It was pretty much across the board that you saw weakness coming in. More importantly, FIs offloaded a significant bit. The selling has been about 10,255 crores in just the last 2 trading sessions itself, and yesterday was no different.
And Friday was equally bad. So Friday and Tuesday, what happened? For a market which was gliding, only going up, we started talking about levels of 23,800 getting conquered.
24,000.
24,000. Okay, what happened? I think this is pure positioning of the market. There's no news actually between Friday and today. It's only about why are markets down? Tariff. Who's selling? FIs are selling. What are they're doing? They are creating short positions. I get a sense, Aisha, this is pure adjustment in the FI book. It could happen at a global level. It could be happening at a local level. The bout of short covering, what we saw in the last couple of days of March, that was a function of year-end compulsion and short covering. What we've experienced in the last 2 days, I think, is perhaps risk-off seems to be making a comeback. But if you analyze the data is very simple. FIs have sold in the cash market and short positions have got created, and the net short positions have gone, actually, we'll talk about it, but the net short positions have gone higher, which means the Nifty is finding resistance at higher levels, which means that a big move from FIs will only be a function of what comes out of tariff or what we hear in terms of earnings. So that clearly means that in the near term, the market seems to be getting jammed. If we get something, and now we'll have to perhaps figure out how much more downside opens up. So in this kind of a market, one is best off waiting for next 48 hours, examining what was going to happen, because if markets have to fall, if the trend has to reverse, we'll figure out in next 2 or 3 days. That's my limited point. Now we've spoken about tariffs, how that could have impact on the market in the near term, medium term and the long term. Our view is very simple, that markets know that tariffs are coming. Anything between 20 to 25% is something which markets know. We've discussed FI flows, that FIs have sold. Market which was going up in the month of March, especially in the last 10 days of March because of short covering, that trade seems to be reversing. But where does India stand? And ultimately, ultimately when the flows will settle down, when clarity would emerge, the tariff interplay could be a 1 week story in terms of when market sentiment. What really matters is that the reason for the correction was economy was slowing down and valuations were expensive. Valuations are no longer expensive, and there is enough and more evidence that high frequency data points now are indicating that things are back on the track. One most important indicator is that you look at the GST data. GST data, and you add India's GDP growth 6.5%, add inflation about 4%, is about 10%. And mathematically the GST data now, or GST tax collections, are up 10% year on year on a large base, which is quite commendable. Auto sales also, the contraction which has happened in auto sales, it could be the March effect, but the trend clearly seems to be Maruti now on an average is selling 2 lakh units. So the average which now it's coming out in auto sales, that also seems to be improving. Other high frequency data which I always look at is electricity consumption. That's also growing. It's no longer contraction. The month of March, whatever data we have, electricity consumption is now looking up. And last on the least is PMI data. PMI data is now above 55, nearing 60, which is an indication of industrial economy picking up. So why am I taking out these points? I'm simply trying to take out this point is that markets fell because of 3 factors, Aisha. FI selling or flows, high valuations and earnings. We don't know what earnings would be, but we know that high frequency data point, which in a sense tell you the momentum of the economy or the bent of the economy, that seems to be there seems to be a marked improvement there. Valuations, now it's a judgment call, what is right, what is wrong, we'll chat about it. And third is FI selling, which seems to be making a comeback. If tariff goes well, I will not be surprised that emerging market will get disproportionate amount of gains. See Aisha, whatever you may argue about tariffs impacting the emerging markets in the near term, the grain of the truth here is that higher tariffs is bad news for America more. And that explains that why the nervousness in the US markets this time is far higher than the nervousness in the emerging markets where before tariffs are being rolled out.
If you like this video, then like, share and subscribe to ET Now.